They're going to have the right documents, but do not let an attorney, especially if they're not a tax attorney, recommend a trust to you and sell you on all the great tax benefits.
Right.
Because they may or may not be setting you up for failure. They don't know your situation.
Yeah, absolutely. And this is just another slide right here. The differences between a grantor and a non-grantor trust. The grantor, like Rick said, allows you to retain some control, where the non-grantor, you're basically relinquishing any control. Realize though, there's an increase in income tax for trusts as a whole, right? Trusts themselves have compressed tax brackets, meaning that they reach the highest tax rate at a much lower income level. So therefore, as we're talking about, to navigate through these channels, it's very important to seek out the right tax advisor to assist you in this, okay? Don't go willy-nilly out there and think you're just gonna be able to read some articles and you're gonna be able to figure this out on your own. Some of y'all might be able to, but it's even if you can or have the ability to, I still recommend meeting someone who's an expert in that field.
Yeah, I mean, I will say the tax brackets, most are 28% in the trust, right?
Yes. Most
individuals aren't paying an effective yield of 28%, right? So even if you're touching that 32 or 34% tax bracket with some of your money, overall, you're not paying 28 overall, right? So if you start putting a bunch of stuff into a trust and it's not properly structured to spit some of that money out so that you're not paying taxes on all that stuff, you could be paying a much higher tax bracket on income than if you just held it personally.
100%, 100%. Okay, so this is a topic that I did a little research on, Rick.